So what is cost behavior? Cost behavior is the way costs change as the level of activity or your cost units change. Okay. So the level of activity is the amount of work done or the volume of production, like the number of units produced or the cost unit, right? So many factors may influence cost. We learn some of these things under activity-based costing, right? Now, major influences include the volume of output or the level of activity. So the more you produce, the more cost you should incur, right? So level of activity can be referred to in one of the following ways. It could be the number of shirts produced, the number of labor hours worked, the number of machine hours worked. Are you getting it? All this will translate to what? The factors, the level of activity, okay? And the level of activity influences what you do. That is what you do actually. If I'm running a school, then the number of students is my level of activity, okay? The common cost behavior is that as level of activity rises, cost will usually rise. For example, it will cost more to produce 200 units than it will to produce 100 units. No be so. However, the problem is to determine which cost will rise and by how much. So cost behavior is usually measured according to the number of units produced and also based on the kind of cost we have at our disposal. So there are various categorizations of cost. Actually, in broader sense, cost is just categorized into two. Okay, your total cost is the sum of your variable cost plus your fixed cost. But however, these costs can either be grouped together or it may be one variation of the other, right? Which created some subcategories of cost, which is the step cost, which is a fixed cost that has increased beyond this level, and a semi-variable cost, or what we call a mixed cost, which is also a semi-fixed cost, right? It is partly fixed, partly what? Variable, right? So what is a variable cost? Now, the variable cost is the most important cost, okay? Is the most important cost when it comes to management accounting. Why am I saying this? Now, to take any decision in management accounting, you need to understand variable cost and understand them very, very well. Is it clear? Now, a variable cost is a cost that in total terms varies with a change in level of activity, but remains constant per unit. So we are saying that if I know one marker is 10 cedis, right? If I produce 10 markers, I will incur a cost of 100 cedis, right? If I produce 100 markers, I will incur a cost of 1,000 cedis. No be so. If I produce 1,000 markers, I will incur a cost of what? 10,000 cedis, right? So you realize that the more markers I produce, the more cost I incur. But is the cost of one marker not constant? Is the cost of one marker not constant? Is the cost of one marker not constant?
Yes, sir, it's constant.
This is what I want you to keep. And this is what will help you to pass your management accounting exam. That the cost per unit, the variable cost per unit is always constant per unit, right? So we are saying that usually in exam, how it is represented, right? They'll tell you that, okay, 400,000, the company produces 400,000 books, right? And at their current level of activity, look, at their current level of activity, the company incurs cost of, let's say, 8 million Ghana cedis. Are you following? So this is the cost that they incur. And they are telling you that this is the 80% capacity level. The company is now trading at 80% capacity. Okay. And maybe the company has received an order. Okay. And they are saying that at this 400,000 level, the total cost, okay, the total cost for the the number of units during the period amounted to, let's say, 10 million Ghana cedi. 10 million is too much. Let me just make it Okay, let's say that 4 million. They are telling us that the total cost is 4 million Ghana cedis. This is what we have, right? This is the total cost being 4 million Ghana cedis. And they are telling us that maybe probably the fixed the fixed element in this total cost amounted to 2 million, something like that, right? So most of the time, what you need to do is to say, okay, assuming we have a special order, that order that we are going to take, what is the cost that arose from the order? Because we are saying that variable cost per unit is always what? Variable cost per unit is always what? What's the word there? It is always what? It is always what? Variable
Constant.
always what? It's always constant. That's the word we are looking for. Keep this in mind and it will help you when you are solving questions, right? So most questions, this is the trick they are going to use for you to help you. They are saying that, okay, if this one is, let's say, let me just make it simple, right? That the 400,000 units that we have, okay, or we produce 400,000 books at a total cost of 8 million, okay? And now they are telling us that 2 million of this relates to what? Fixed cost. Okay, let's say that this is what we have. 2 million of this relates to what? Fixed cost. And they are telling us that we have received a special order. Okay, we have received a special order. And this special order, the selling price that these people want to give us for each unit is, let's say, 14 cedis per book, right? They want to buy it at 14 cedis per book. But our normal selling price is what? Let's say 20 cedis, or let's say, yes, 24 cedis per book. Let's just say this is what we have, 24 cedis per book, right? So this is the new order, the special order we are getting, and this is our normal selling price, right? But this is the only information that we have. And they said that should we accept or reject the order? Okay. So a company has just received an order. I get it. And then the company, you see, it is operating at 80% capacity. 80% capacity it means that your normal installed capacity that you operate at, you are not operating at that same capacity, right? You are just using 80% of your strength. It means that what is left? It means that how much of your strength are you not using?
20%.
It means that 20%. You are not using 20% of your strength, right? So anytime you get questions that have cost behavior, right? They differ in many ways, okay? Especially where you have to split fixed cost and variable cost. Now, it comes all the time, hidden in majority of questions, right? So let's rewrite this question in a nice way, okay? Let's rewrite this question in a nice way and then think we can all write. I just want you to get used to how these things are examined in your exam. We'll look at all the different ways that they use cost behavior to trick you under exam conditions, right? We'll look at all the different kinds or all the different ways that they use cost behavior to. So company A is currently, okay, is currently operating at 80% capacity, okay, producing 400,000 books. Okay. It usually sells its books at 24 cedis per book. And the total cost incurred at current capacity Okay, carrying capacity is 8 million to bracket with, let's make it 1.6 million of fixed cost, right? Okay, so this is what we have. And they are telling you that the company has received a special order to sell their books that's at the spare capacity to a bookstore also, who will sell the company's books as their own branded books. A price of 15 CDs per book was proposed by the bookstore. Was proposed by the bookstore. Required. Assess the viability of the special order, right? 10 marks. You see how I've put it into a full question, right? And cost behavior is all through your paper. Once you understand cost behavior, you understand management accounting. What did I say?
Once you understand cost behavior, we understand management accounting.
Management accounting. Okay. So are you writing it down? Are you putting it down?
Yes, sir.
Kindly do so. Once you are done, we will use the principles of cost behavior to understand how these things work. And cost behavior can apply throughout the syllabus, from cost estimation to budgeting to variance analysis to investment appraisal to short-term and long-term decision making. It is one thing that you can never do away without, right? Because it can be applied under every context. Are we okay? Are you done with the question?
Sir, please, can you help me in reading it for me?
Company A is currently operating at 80% capacity, producing 400,000 books, right? It usually sells its books at 24 CDs per book, and the total cost incurred at the current capacity is Ghana cedis. 1.6 million relating to fixed cost, right? Out of the 8 million. The company has received a special order to sell their books at their spare capacity to a bookstore who will sell the company's books at their own branded books. A price of 15 CDs per book was proposed by the bookstore. So let's assess whether this price of 15 CDs is good or is bad. Are we okay? That's what they are asking you. So as a student, you are going to test whether we should accept the order or we should reject the order. This is a decision-making question, right? But this is where most of the time we end up using cost behavior. Okay, mostly. This is where you have a lot of complex cost behavior scenarios that you have to apply. I hope that is okay. So if you are done with the question, we move. Are you done?
Yes, sir.
Yes, sir.
Okay, so with that being said, first of all, we said that what variable costs vary with the level of activity, no be so? So the more you produce, the more variable cost you incur. But variable cost per unit is what? What did we say? Variable cost per unit is always what?
Constant.
Constant. Have it. If one corn is 2 cedis, even if I produce 10 million corn, one corn is still what? 2 cedis. True or false? Have this in mind. So that no
True.
matter the number of the cost they give you, you can just divide and get the constant unit, right? That's the rule in management accounting. Never forget this. Okay. Now, fixed costs do not change. Fixed costs are costs that do not change, irrespective of the level of activity, but up to some certain level. Okay. So, for instance, if I have, let's say, if I have a room, right, that can contain 100 students. Are you all listening? And then the rent I'm paying for this room is 10,000 cedis. My question is, if I bring one student, how much rent am I going to pay?
10,000.
10,000.
If I bring 10 students, how much am I going to pay for rent?
10,000.
10,000.
If I bring 90 students, how much rent am I going to pay? Is it still not 10,000? If I bring 100 students, how much rent would I pay? Still what?
10,000.
But the thing is that this room is now full. True or false? So fixed costs are fixed up to some certain range or up to some certain what? Limit. Do you get it? But what if now I bring 101 students? What happens? What happens? It means that
We will need a new room.
right? We'll need new room to put that extra one student, right? Because this room is full. Now, the rent is also 10,000 for this, right? Until it gets full again. So fixed costs are only fixed up to a certain level and they increase as the range changes. For instance, it means that if I should put this onto a graph, right? Whether I bring no students or I bring up to 100 students, right? It's the same cost of what? 10,000 cedis I'm going to incur. True or false? True or false? So if I bring one, I pay 10,000. If I bring 10, I pay 10,000. If I bring 90, I pay 10,000, right? If I bring 100, I'll still pay the same 10,000. No be so? So you see the diagram looks like this. Do you all see? But immediately I bring 101 students back, it means I will incur another extra cost of 10,000. So I'll start paying a total rent of 20. True or false? True or false?
True.
True.
These students will now be here. Now, if I decide to bring 150 students, it will still be here, right? If I decide to bring 190 students, it will still be here, no be so. So at the end of the day, what happens? You see that this one starts climbing like a staircase. What if this room, I now get an extra 100 students, 99 students here, then this room too is full, true or false? We need another third room. So the third room, if I bring students again, you see, it will be climbing like staircase. So this is a fixed cost that has exceeded its limit, and we call that a step fixed cost or a step cost. I hope that makes sense. I hope that makes sense. So fixed costs do not
Yes, sir.
except when they exceed the range that they were what predominantly created for. Make sense? So those fixed costs do not change. They can change only if they exceed that limit they were set for. Make sense? I hope the example helped. So unless that room is full before a step cost will be created. And how is this implemented practically? For instance, let's take a simple illustration. We'll come back to the original question, okay? So this is just a simple question. Let's say this is question 2, right? So question 1, we'll solve it after we understand this. So a company has the following information, not so, which is relating to their budget. But due to heavy rains, okay, their management accounting records were destroyed, and the only information that could be recovered is as follows, right? Is as follows. Okay. So we have January, February, March, April, right? This is the information we have. Then we have the number of estimated units, right? The number of estimated units produced. Please be writing alongside so that we do not spend time. As I'm writing, we are writing. So January, they produce 100,000 units. February, they produce 200,000 units. March, they produce 300,000 units. And April, they produce 500,000 units. Okay, so this is what we have. Then costs. Okay, so the cost, because their staff have been destroyed. Direct material was 1.5 million Ghana cedi. That one they were able to tell us. And then direct labor was only available for April because their costing records have been destroyed, right? Direct expenses, $2.4 million. Then we have variable production costs or overheads. We have 1,850 million, right? So this is the information that we had. Then we had what? Depreciation of machines. So we have depreciation being 4.5 million. Then we have rent. Rent. We are saying that rent is 2.9 million. 2.4. Let's make it 2.4. Okay. Then we have electricity. The 5 million. Then additional information say that the company incurs additional electricity costs when the number of units produced exceed 450,000 units. Incurs additional electricity cost of 10,000 cedis when the number of units produced exceeds 450,000 units, right? So this is what we have. And the requirement is to compute the total budgetary cost, right? The cost that they flow. Please, have you written it? Have you written it down? Or I should go back to the question. So put down the figures. Please, are you done now? Are you down now? Are you done now? Nobody is saying anything.
Please, the additional information.
Okay. The company incurs additional electricity cost of 10,000 cedis when the number of units produced exceed 450,000 units, right? Please, are you all done? Let me know so that we can move. We have a lot to do, so we need to speed up a little. Are you all done?
Yes, sir.
Okay. Now you,
Sir.
right? Now, what is the rules? We have to use the rules of cost behavior to answer this, right? So what I want you to do is to look at all the costs and tell which ones are variable and which ones are fixed. Because fixed costs and variable costs have their own rules, right? Direct material, is it variable or fixed?
It's variable.
Variable.
Variable. Direct labor, variable, right? Direct
Variable.
variable. Variable production overhead, variable.
Variable.
Depreciation, fixed, right?
Yeah.
No, rent, fixed.
Fixed.
Electricity, fixed. So now that
Fixed.
you know this, we know that variable costs here, these places are empty. So how do we fill this in? We learned some rules. Do you remember? And what were those rules?
Variable cost is constant
Per unit. Variable
per unit.
constant per unit. So I'm going to say what? Let's fill in this one. So we have January, February, March, and what? And April, right? Yeah. So we are going to fill in. Oh, let's bring the units first. But I hope you are getting where I'm coming from. So number of units or the level of activity. Okay, so this period, they produce 100,000 units, right? Here they produce 200,000, 300,000, and then they produce what? 500,000 in April, okay? So let's just get the costs for each of the months. And we are going to do this together, right? So with this being said, what was the first cost? We had direct material, right? Direct material was how much?
Direct material was 1.5 million.
1.5 million. And we know that this 1.5 million is for how much? It's for 100,000 units.
It's 100 units.
It's for 100,000 units. Okay. Now we know this is variable, right? And variable cost per unit do not change, right? Variable cost per unit does not change. It not be so. So in that case,
Yeah.
just open a new sheet and then we'll do our workings there. Let me call here workings. Okay. So we are going to say what? Workings. And then we are going to say what? Direct material costs per unit, not so. What direct material cost per unit become? We know that the cost was what? 1.5 million, not so. But it was for how many units? 100,000 units, not so. Okay. And that means the direct material cost per unit is what? 15 cedis per unit.
15 says.
Okay, since it's 15 cedis per unit, that means if we take January would have been 15 by the 100,000, right? And that's what gave us the 1.5 million. Do you all agree? Do you all agree?
Yes, sir.
February,
Sir.
February will also be the same 15 by 200,000, no be so?
200. Yes, sir.
That
Which
gives us
will give us 3 million.
3 million, okay. Then March will also be 15 cedis by what? 300,000 also. And that gives us what?
4.5 million.
No be so? Okay, then April give us 15 by, we are producing 500,000, right? which gives us 7.
7.5 million.
Also, so since our costing data has been lost, we can still update this, right? So let's go back. Let's go back and update. Here was what? 3 million also,
Yeah.
4.5 million, and then what? 7.5 million. You see how easy this is? So once we know one, we can do all of it. True or false?
True.
True. Okay. So with that being said, which one is next in line? Direct labor. So direct labor, we can work. Direct labor is variable, right? And we know variable cost per unit is what? It's constant, no be so. So what's the direct labor cost?
It's 11
No,
cities per
what was the
unit.
total cost? We have to work it together.
Okay, the total cost, okay, is 5.5 million.
5.5 million. At what level of activity?
500,000.
At 500,000, okay, units. So that means direct labor cost per unit is 11 cedis per unit, no be so? Which we know is constant for every level of activity. So we just need to multiply by the level of activity. Do you all agree? Are you getting cost behavior? You see, it's not difficult. And this thing, I don't want you to forget because this was what will help you pass management accounting. So direct labor, we know it was what? 11 cedis per unit. So 11 cedis by 100,000 give us what? 1.1 million. Do you all agree? Do you all agree? 2.2 million. 3.3 million. And 5.5 million. Do you all get how I'm getting the figures? I'm just multiplying by the unit, by the unit, by the unit, by the unit, because it's constant. Once you have one, you can get all the rest. Make sense? Does that?
Yes, sir.
Okay. This one was 15, so we can put 15 there. Okay. Then what was the direct expenses? Cost of time. Let's just work it in the bracket. Direct expenses. What was the figure?
It was
2,400,000.
2.4 million. And how many units was it incurred for?
200,000.
200,000 units. Okay, so that means direct expenses per unit is what?
12
It's
cities.
12 cities.
12 cedis per unit. Okay, so if it's
Yes, sir.
per unit, we just have to multiply 12 by this,
1.2.
1.2 million,
1.2,
2.4 million,
2.4.
3.6 million,
Yeah.
and 6 million. No be so. Are we on point?
Yes.
Okay. Then we had variable production overheads. So for variable overhead, it is still variable, right? What cost was it incurred for?
1,800 and
1,850,000.
1,850,000.
Okay. And for which level of activity?
100,000.
100,000. Okay, so that gives us how much? That gave us how much?
18.5 cities.
It is 50 pesos per unit, right? Okay. So
Yes.
now we multiply by each of them because it's variable.
1.850.
180,
1,850,000.
which means we have confirmed what we had, right? By 200. That gives us 2 million or 3. 3 million.
700,000.
Then
5,550,000.
then the last one.
9,250,000.
That was it. Then what followed?
Depreciation.
Depreciation. We know depreciation is what?
Fixed.
It's fixed. So far as it's fixed, that means until there's a specific range which it exceeds, it's fixed throughout, right? Straight line depreciation.
Fixed.
So how much was the depreciation?
4,500,000.
At what level?
500,000.
So since it was 4.5 million, it will be 4.5 million throughout, right? Because it's fixed. Fixed, 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 and fixed. Is the question easy? Or if you don't know, you don't know. Okay, then what followed? Rent, right?
Rent.
The rent was what? Rent we know is fixed, right?
Yes.
How much was rent?
2,400,000. 2.4.
At what level?
200,000.
So 2.4 million. So since there's no caveat about rent, it means rent will be the same, right? 2.4 everywhere we go. 2.4 everywhere we go. 2.4 everywhere we go, right? Okay. Then what followed? Electricity, not so.
Electricity.
Okay. Now they said something. Where did we have electricity?
April.
April, how much?
5 million.
5 million. 5 million exactly.
Yes, sir.
Okay. But there's a caveat. They said that when level of activity exceeds 450,000, we incur additional cost of what? 10,000. True or false?
True.
So that means there's a step cost, right? That means 450,000 units is the limit. Anything that we produce that exceeds 450, we must add additional 10,000 cost to it. No be so. So let's see. Which of the units has exceeded 450? Which month did we
April.
450?
500.
April, which is what? 500,000. So it means that this one, we have already incurred the 10,000 in there. True or false? So to get the original fixed cost, what do we have to do? What do we have to do? Do you get what I'm trying to say? If you produce more than 450, any fixed cost that you have, Obesan Boka extra 10,000. And they've told us that the cost we have is 5 million. Have we not exceeded 450,000?
Yes, sir.
And
We
the 5
have.
million, have they not given it to us already, or are we the ones who computed it?
They've
Yes,
given
that
it to
is-
us.
That means that extra 10,000 is it not already in the 5 million?
It's already.
It's already. So how do we get the original fixed cost without the increase?
So we have to deduct the 10.
Take it out.
10,000. Yeah.
Yes, to get the original fixed cost. So if I take here was 300,000, right? If I take that, that means I have what? 4,990,000, right? Being my fixed cost. That means this one was the same throughout, right? This one was the same throughout until we exceeded that 450,000 units. Then we got what? An extra 10,000 on top of this, right? And that is what gave us this figure. Have you learned something? And this, imagine if they brought this simple question to exam, the way people will feel, because people do not understand cost behavior. And I hope that is not your portion. Now everybody's okay with fixed cost, variable cost, and step fixed cost. What if I said that if units produced exceed 250,000 units, extra 100,000 is incurred for rent? Extra 100,000 is incurred for rent. Please, I'm coming. Please, are we okay? Shall we proceed? Let's go back to our special order question, right? Okay. Here's the question, right? Yeah. So this is the secret about management accounting. Anytime you are doing a question, and it tells you that, oh, the company is operating at 70% capacity, 80%, make sure you always find 100%. What did I say?
Make sure you always find 100%.
That's the rule. Okay, so they told us that the company is operating at 80%. And that 80%, they were producing how many units?
400,000.
400,000. So we are saying that if 80% gave us what? 400,000 what? Books, right? Then 100% will give us what? We don't know. But we know that if it will give us more, then what? Less what? Divide. True or false?
True.
So that means what? 100 out of 80 times 400,000 should give us what?
500,000.
500,000 books, right? That means that they have a total capacity. This is their total capacity or their 100% capacity of 500,000 units, right? Now, look, 80% is the same as 80 over 100. Mewa. No be so. Are you listening? Now,
Yeah.
they're saying that if 80 over 100 gave us 400,000, then 100 over 100 will give us what? We don't know. Now, if you are doing this, you are saying that it becomes what? 100 over 100 divided by 80 over 100 times 400,000. Is that not so? But we know multiplication and division are reciprocals. So this can be rewritten as 100 over 100 times 100 over 80 times 400,000. I'm just showing you something. Okay. So what you are saying here is that with what you have here, okay, they are reciprocals. Okay, they are reciprocal. So to reciprocate this, you end up with what? 0.8. Okay, or you can rewrite it as the way you divide. Now you have 100 over 80. Oh, where is it? This one can be rewritten as 400,000 if I want to go reciprocal, divided by divided by 0.8, because this one will now turn upside down, right? Because it's reciprocal. So this will end up with 400,000 over 0.8. And you are still going to get the same 500,000 units. Now the question is, Bill, why this stress? I just want to show you a little trick that anytime they tell you a company has 40% capacity and you want to get 100% capacity, just take let's say 40% capacity was 40,000, right? And they want 100%. To get 100%, just take the 40,000 and just divide by 0.4. It will give you straight. Do you get it? So just like this company, they said he was operating at what? 80% capacity. What will 100% capacity be now? You just have to take what? The 400,000 and just divide by what? And just divide by what? and just divide by
By 0.8.
0.8.
0.8. That is it. So if they give you
Mm.
50% capacity, just divide by 0.7, right? If they give you 20% capacity, just divide by 0.4, 0.2, sorry. Are we okay? So this one, I'll just divide by the 0.8, and then I'll end up getting the 100% capacity, because this can be rewritten as 400,000 divided by what? 80 over 100. And this is the same as 400,000 times 100 over 80, right? You see that? Multiplication, division, reciprocal. So it's the same thing as this, but it is better if you just divide by the 0.8, because in actual sense, to get the extra one, you are just saying that this is the cash flow over 1 minus the rate, right? 1 minus the rate. This is what we are doing, right? That is it. So don't worry. I'm just giving you a shortcut, and it will help you in especially budgeting questions, okay? Where you need to get what we call a budget cost allowance. Just have this one at the back of your toolkit, and then you should be fine. Are we all okay? Are we all okay? So now immediately
Yes, sir.
a question, and I tell you that the person is operating at 70% capacity. Just divide by 0.7, right? Take the existing capacity and divide by 0.7, and you should get the original 100%. Makes sense. So now we know that this company has a total capacity of 500,000, but they are telling us that the current capacity is how much? What's the current capacity? This
Four-
is now producing 400.
400,000.
So what's the spare capacity or the extra capacity that you have?
100,000.
That means the
100,000.
bookshop that has come and has placed the order, are you getting it? Can get 100,000 books. True or false? True or false? True, right? Okay. But then let's assess the total cost. We know that the total cost, listen, total cost is always giving us your fixed cost, okay? Total cost is always the sum of fixed costs plus variable cost per unit times the number of units. Why am I giving you this? Because variable cost is constant per unit. So when you multiply by the number of units, then you now get your total what? Variable cost. Do you understand? So get this rule. This thing, you've seen it in mathematics as y equals a plus b x. You've seen it before, haven't you? Where if you draw a graph like this is y, the y-intercept, where it cuts the y-axis, right? This is b, this is x, right? I hope that is clear. I hope that is clear. So b is simply the gradient of the straight line. You've seen this somewhere before, haven't you?
Yes, sir.
Yes, it's the same thing in management. Management accounting is actually mathematics in disguise. It's still mathematics. So don't forget. Is that okay? I'm teaching you this because this diet, all your questions are around this area. Everything that will come, you see, it looks like this. Semi-variable cost, variance, semi-variable cost. Confusing. But I hope you are gradually getting it. Just relax, take your time and understand. If you don't understand anything, draw my attention. Is that okay? Are we all on point?
Yes, sir.
Okay, now we are saying that for 400,000 units, the total cost was how much?
1.6 for fixed
Eight.
cost. 800.
8 million.
8 million. 8 million.
Total cost was 8 million, no be so. Okay, if total cost was 8 million, and they are telling us that out of that 8 million, fixed cost was how much?
1.6.
1.6.
6 million. Okay, so now when we take this out, it means that how much becomes our variable cost? Total variable cost.
3.4.
6.4.
No, 6.4.
6.4.
6.4 million. Okay.
6.4.
We know our variable cost, but we know that variable cost per unit is always constant, right? No,
Yes, sir.
so what then becomes our variable cost per unit? That means our variable cost per unit becomes what? our total what? Variable cost divided by what? The number of units, right? No, be so.
Yes, sir.
So we know our
Yes, sir.
total variable cost was 6.4 million. And then our unit was what? 400,000 what? Units. That means what's our variable cost per unit here?
16 per unit. 16 cedis per unit.
16 cedis per unit, right? That means that once we have this, we can easily get our total cost equation to say that what? Total cost here should be equal to what? 1.6 million plus 16 cedis by X, where X represents the number of units. Do you all agree? Do you all agree?
Yes, sir.
Yeah, so if we put any level of activity inside, we can get the total cost for it. If you put 400,000 inside right now, you end up with 8 million. True or false?
True.
True. So with this that we see, now they said that these people want to take a special order. They want to what? Come up with what? A special order. Or they want us to what? Accept their order. But the thing is, if we should accept the order, is it profitable or not? Now, there's one principle you must understand when it comes to management accounting. And the most important principle, let me just use color red, right? The most important concept in management accounting, right? The most important concept in management accounting is the concept of contribution. Please, are you listening? I said it's the concept of what?
Contribution.
Now, what is contribution? Contribution is the profit that is available, right? That can cover your fixed costs. So from a management accountant's perspective, from a financial accountant's perspective, right? He uses absorption costing. And to the financial accountant, how does he compute profit? The financial accountant computes profit this way, right? He computes profit this way. He takes his sales, not so. Then he will less cost of sales. Then he gets what? Sales minus cost of sales. You come and get what? Gross profit. True or false? True or false?
True.
True.
Sales minus cost of sales or sales minus production cost gives you gross profit. Then we take gross profits and now take out what? Non-production cost, right? Which is selling, distribution, and admin costs. Then we get what? Net profit. Do you all agree? This
Yes.
is the financial accountant approach to determining profit, right? Let's come to management accounting. For the management accountant, profit is derived by looking at the contribution towards variable cost and fixed cost. So we take our sales, right, and less all our variable costs from it. Then we end up with our most important profit, because this is the profit that is available to cover our fixed costs, right? So sales minus all variable costs gives us contribution, and contribution minus all our fixed costs now gives us profits. Please, are you following? So to every question that you are going to answer, this is the mechanism you are going to use to what? Answer it. Are you getting it? So sales minus all variable costs gives us contribution, the most important concept. Then contribution, which is a profit that can cover our fixed costs. You know how much of the contribution can cover your fixed cost, right? So contribution minus fixed costs now gives us what? Profits. So this concept is based on the concept of what we call marginal costing. And the first one we saw here is based on the concept of what we call absorption what? Costing. These are you all following? So for a management accountant, a profit statement can come from these two dimensions, right? But the most important one, which uses cost behavior, is the concept of contribution. Never forget contribution. selling price minus variable cost or sales minus variable cost should always give us what contribution. We now take fixed cost before we get what profit. And remember, since selling price is constant per unit, right? We know selling price is constant per unit because if one is 2 CD, 10 will be what? 20 CD. No be so, but one is still 2 CD. Selling price per unit is constant. Variable cost per unit is also constant. And we know this minus this is equal to our contribution. That means contribution per unit is also what? If selling price per unit is constant, variable cost per unit is constant. That means contribution per unit is also what?
Constant.
Constant. You have passed management accounting. Amen.
Amen.
This is the rule. The reason why people are struggling with management accounting to and fro is because they forget that contribution per unit is constant. So they always mess up around that area. So variable cost sales contribution fixed because that's the product or the subtraction of variable cost from selling price gives you contribution. And so far as selling price is constant per unit, variable cost is constant per unit. It makes your contribution also constant per unit. Does that make sense? And contribution is the most important profit that we use to take decisions in management accounting. And the reason is because all other profits are deemed to be, all other costs are deemed to be fixed, right? So contribution is what you always use to take decisions. So this order that we've taken, this special order that we have taken, we need to check whether that order can generate an extra contribution for us, which can help us cover our fixed costs. Do you understand? Do you understand? Do you get? So in management accounting, it's all about contribution. Once you are able to talk about contribution or what contribution is being generated from the order or whatever you are doing, then if it generates an extra contribution, then it is a profitable decision. If it is not able to generate an extra contribution, then we should not accept the order. So let's see. If we decide to accept the order, let's see. How much did they say they will sell the goods for? The books.
15 CDs per one.
Okay, we will sell it for 15 CDs per what? Per unit,
Units.
right? Per book. But how many books are we going to sell to the supermarket? That's 100,000 books, right? Spare capacity. Do you remember?
Wow.
Yes, because we can produce 500, but we are currently producing 400. And they said our spare capacity, we can use it to take an order. That means this 100,000 units that are left, the supermarket can buy it for, the bookstore can buy it from us, right? That's 15 by what? 100,000. That means they are willing to produce what? Provide us with 1.5 what? Million, not so? No be so. But what was the variable cost? Let's see if this comes with an extra contribution. What's the variable cost per unit? What's our variable cost per unit?
And that's 16.
16 per unit, right? So variable
Yeah.
cost per unit was 16 per unit. And 16 per unit gives us what? $1.6 million. So what happens? We have a loss contribution. Do you all agree? So should we accept the order or we should reject the order?
Reject the order.
Why? Because if we
Because
accept the order, we are going to lose an extra what?
100,000.
It is right. Because we will incur more costs than the amount we are receiving. So what would you advise the supplier to do? The bookshop, they should increase their price, right? Because our normal book we sell for 24 and you want to buy it at 15 because we are not doing anything. But even if we are not doing anything, the price should be good. True or false? Even if you are not doing anything, shouldn't the price you offer be good? Should we spend more money than we can? No. Do you get it? Because still, something that we can manufacture for 1,006, and that's not even all the cost too. Because see, this 1,006 is even only the variable cost. What about the other fixed costs we are incurring? This 1,006 is the cost we will incur, and you are paying us 1,005 for it. Is it a good decision? Something that we incur 1,006 to produce, then you are paying us 1,005 for it. Is it a good decision?
No.
No, we should reject it, because at the end of the day, we are not getting something good from this. Understood? Please, did we get the concept? Did we get the concept?
Yes, please.
Okay. There is one area again where we can use this variable cost per unit is constant thing, right? The issue of flexed budgets, okay? Where we have a flex budget. Now, what is a flex budget? A flex budget, okay, is simply a budget adjusted to reflect actual level of activity or actual level of activity. Okay. And what does that mean? It means that if my original budget, okay, which is usually static or fixed, you know, every company has a fixed budget. What they initially planned is a fixed budget. This fixed budget, assuming it had a cost of 100,000 cedis, right? And this was for 10,000 units. Okay, this is the fixed budget. Now, if we budgeted to produce 10,000 units, and actually, okay, we ended up producing 11,000 units. We are saying that this 10,000 is not useful. Okay, this is not useful for decision making anymore. Do you all agree that this will not be useful for decision making anymore? Do you all agree that this 10,000 will not be useful for decision making anymore?
Yes,
Yeah.
sir.
Why?
Because it's not the actual.
Yes, because we have been able to tell that we have been able to produce at 100,000, right? So now that we know that we have been able to produce 11,000 units, that means that this 10,000 that we use to what? Group this is not relevant for decision making. So that is when a flex budget comes in. And what we do is that we take the same 100,000, right? Get our budgeted cost per unit. Now, anytime you divide the budget into per unit terms, we call it the standard cost. What did I say?
Cost.
What did I say? Anytime you what?
You divide the budget.
Into per unit terms, it is called standard cost. So if I get the budgeted cost per unit, which is the 100,000 divided by what? The 10,000 units, just like the question we did, you remember, where we said this was variable, this was fixed. You realize that we're dividing, right? So once we divide, that means what's the budgeted cost per unit? It's 10 cedis per unit, meboa. True or false? Now, this 10 cedis per unit, if I end up multiplying it by the 11,000, it can really tell me how much we would have incurred, right? Assuming we planned using the 10 cedis. So that means we would have planned for what? Let's say this one gave us a total cost of 120,000, right? But we would have planned how much? 110,000, right? True or false? True or false?
True.
We can use this to take a good decision, because if we had compared the 100,000 to the 120,000, we can't compare. Why? Because the units are different. This is at 10,000 units. This is at 120,000 units. We cannot compare. Cost, we can only compare one variable at one time. So it's cost against cost or unit against unit, right? But where the costs are different and the units are different, we cannot compare. We need to maintain the same level of units. That is why we divided, right? To get the cost per unit, which assuming it was variable cost, it would be what? Constant, right? Then we use it to multiply the actual levels of activity, the actual units produced. That gave us 110, which is like the standard. This is what we planned. Are you getting it? And this is what actually happened. So assuming this was material cost, we planned to spend material cost of 110, but we actually ended up spending 120. Yaboka na yenya mfaso.
Yaboka.
Yaboka, right? We have lost money. We have lost because we planned to spend 110 for our cost, but we ended up spending 120. And you see now all of them are at 11,000 units, 11,000 units. So we can use that to take a decision, right? And this is what will create a variance. So we have lost, yes, by how much? We have lost about 10,000. So this is an adverse variance of 10,000 cedis. You see, the concept that we are learning, it's applied throughout your syllabus. If you get this concept once, Kim, that is it. There's no question that can beat you. That's why I'm just not teaching you the surface alone. If I teach you the surface alone and you get a question, you will get confused because you don't understand the principle behind it. It is the principle. Did you get it or should I go over again?
Please go over.
Please go over.
I'm saying that, are you listening? The budget on its own, are you getting it? Assuming the actual units produced changes, it means that the budget is not relevant for decision again. Why? Because I initially planned to produce 10,000. But what actually happened was I produced 11,000. Now there's evidence that 11,000 is the actual budget. True or false?
True.
So why should I use 10,000 to take decision? It doesn't make sense anymore, does it? You see, when I was planning, this hadn't happened. That's why I used 10,000. Now, 10,000 is actually what has happened. So I need to revise my original plan to 11,000. Meboa.
Okay.
Does it make sense to everyone now?
Yes.
Because the time I was planning, this 11,000 hadn't actually happened. Now it has happened. So what would my original plan had been, assuming I produced 11,000? So that means that this 100,000 gave us 10,000 units, right? So if I divide, I get 10 cedis per unit. So if my original plan was 11,000, how much cost would I have incurred? And is that not 110,000? Is that not 110,000 cedis? Now, can't I compare to the actual cost? Because they are all at 11,000, 11,000. True or false? True or false? Yeah, so now I can compare, right? Let me give you a typical example for you to understand, right? So there are two women who are arguing that school fees in their children's school is expensive or cheap, right? So this is woman one, okay, woman one, whose children attend school one, okay? And then school one, she has 4 children there in school one, okay? She has 4 children in school one, and the 4 children pay 7,500 cedis, okay? Are you following? Or let me say they pay, okay, she has 5 children in school one and they pay 7,500. Then we have woman two, okay, whose children attend school two. And then she has 3 children there and the 3 children are paying 4,800. Can we compare which of the schools is expensive just by looking at this? Can we?
Oh,
Why? Why can't we compare?
because they are not the same. The number of children are not the same. One is 5, one is 3.
So let's go up again. Can we compare 100,000 cedis to the 120,000 cedis and see which one is expensive?
No,
Why?
because one is
But the units
fixed
are not
budget.
the same.
Yeah,
One
the
is
same.
6,000 units and one is 11,000 units. To make them the same, we must make sure the units are also the same before we can compare the cost. Does that make sense to you now?
Okay. Yeah.
Do you get it? So let's see. This is Eric, right? Eric is a marketer, okay? He's a marketer, and then he works at ABC Limited, right? And Eric takes 10,000 CDs, okay? This is Barnes. Barnes works as an accountant, okay, in BCD Limited, and he takes 12,000 CDs. Can we compare the two jobs?
Oh.
Why?
Yeah, two different.
One is a marketer and the other is an accountant.
Yeah,
And they are different things.
and there are different companies too, right?
Yes.
So it is either we say, okay, let's compare the role of marketers and accountants in ABC Limited and see who takes more, right? At least there's the same base, all in ABC. But here there are two different things we can't compare. It is either we say, okay, let's look at what? The accountants in ABC, right? Against the accountants in BCD. Then now it makes sense, right? Because accountants in ABC are taking 13,500. So now we have a favorable base, right? So now it makes sense, right? That ABC is better than BCD in terms of salary. Does that make sense?
Okay.
Are you getting the concept?
Mhm.
Are you getting the concept?
Yes, sir.
So we are saying that every time you are taking a decision, the fixed budget becomes eradicated, right? You eradicate it because it doesn't become useful for decision making anymore. Why? Because the plan has actually been implemented and what happened is real. So if what happened differed from our original plan, we should have said, okay, we plan to produce 10,000 initially, but now we produce 11. What if the original plan was reflected at the 11? What will happen? So you see, when I reflected the 10 CDs per unit at the 11, we ended up with 110 instead of the 100, meaning this 110 could have been our original plan, right? And we compare it to what actually happened. Then we'll see whether we would have generated a profit or would have made a loss. Makes sense. Are you sure it's okay? Are you sure it's understood now? Is it understood now?
Yes, sir.
Are you sure it's well understood?
Yeah.
Okay. Coming. So, based on what we just learned, we are going to take a question that came on May 2015, right? Which is on flex budget. Now, look at what it says. It says what? We should prepare a budget that will be useful for management control purpose and briefly comment on the company's performance in September 2015. Now, look at something that happened. This fixed budget, right? How many units were we producing under the fixed budget? How many units?
1,000 units.
1,000.
And what was the actual results?
700.
700.
Now, can we measure this cost? Can we compare them?
No.
Why no? Why can't we compare these costs?
Because the units are not the same.
The units are not the same. When we planned this 1,000, this 700 hadn't happened, right? Now the
Yeah.
700 has happened. So what do we need to do? We need to reflect all these costs at the 700 level. True or false?
True.
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 We must convert everything to 700. Meboa. And that means we need
Yes,
to
sir.
be very what? We need to be very good with cost behavior. So we are saying that, okay, we know selling price per unit is constant. True or false?
True.
Variable cost per unit. This one, is it variable or fixed? Variable, right?
Variable.
Mm.
Variable.
Variable.
Variable cost, is it constant per unit?
Yes, constant.
Okay. Direct labor, variable or fixed?
Variable.
Variable overhead.
Variable.
Variable.
Fixed cost, fixed, right? This is the only one which is fixed. Do you understand? So now that we've seen this, what do we need? We can easily get what? The missing figures, right? You know that, right? We even did a difficult one than this one. So you see, the question we solved together was difficult than what we have. Makes sense. So let's try and get the missing figures. So first of all, what's the direct material cost per unit in the fixed budget? So what is our standard cost per unit? We said standard cost per unit is giving us what? Our total budgeted cost, not so, over our total budgeted level of activity. You've seen this before, right? Do you remember OAR? Remember,
Yes,
it's total budgeted overhead cost over total budgeted level of activity. Yes. So
Yes,
anytime you get budget in per unit form, it's called a standard cost. So OAR is a standard fixed cost rate. Do you understand? That's why it's called overhead absorption rate. So we are saying that our budgeted cost divided by our budgeted level of activity should give us a standard cost per unit. So what we are saying now is that if I take sales, for instance, what's my selling price per unit? That means I must take the budgeted selling price, which is 30,000, right? And divide by what? The budgeted level of the budgeted unit. That means our selling price will be what? 30 cedis per unit. True or false? True or false?
True.
So what becomes our revised budget? What becomes our revised budget, which is the flexed? This 30, I must multiply by what? Multiply by how
30
many units?
times the 700 units.
Yes, times the actual units produced, 700. That means the new selling price is going to be how much? The new selling price will be how much? Do you all get it? Is it understood?
Yes, sir. It will be 21,200.
21,000. Okay. Let's go to material. Direct material. Okay. So let's see. Direct material. Direct material. The direct material cost was 10,000, right? But we produced 1,000 units per the budget. That means it's 10 cedis per unit. Do you all agree? Do you all agree?
Yes, sir.
yes.
So what becomes the revised budget or the flexed?
10 cedi per unit
How many
times
units? 700 units, right? Which is the act.
700.
That means this will cost 7,000. Not so. Then let's.
I want to,
You said what's
are
the?
we still,
You said are we still?
are we still using the sales multiplied by the sales?
No. See, I told you every one of the 1,000 here is not real again. Everything here was by 1,000, and this 1,000 is not relevant again because now we produce 700. So each one of these must now be reflected at the 700.
Okay.
Remember, woman 1 had 3 children, woman 2 had 5 children, right? We cannot use the cost of the 4.8 and the 7.5. We cannot compare them. Do you remember? We must
Yes,
change all to the one we use as the base. So we must reflect all 3 children, 3 children. Find 3 children in woman 1 school against 3 children in woman 2 school. Then it will work. Or 5 children in woman 1 school against 5 children in woman 2 school. Do you understand?
yes, sir.
So all must be at the same level, but you can't compare 1,000 units and 700. But since 700 is the actual, it's a more appropriate base to use because that one has actually happened. Do you all agree? That's why everything we divide to get the per unit because it's constant, and then we use it to multiply the actual units that happened. Do you get it now?
Yes, I get it. Thank you.
So for direct labor, it was what, 5,000 in the budget, and it was for how many units? Is it not 1,000 units? So that means this one gives us 5 cedis per unit. Not so. So if
Okay.
you put the flex gives us what? The 5 cedis per unit times what?
5
300
cedis multiplied by 700.
That gives us 3,000 what? 500. Not so. Not so.
Yes, sir.
What about variable production overhead? Variable overheads. It was also 3,000 also divided by what? 1,000 units. That means this one gives us what? 3 cedis per what? Per unit. If we want to get the flex or the original, the revised budget, it will be 3 cedis times what? The 700 units, not so. And that gives us what? 2,000 what? 100, not so. Okay. What about fixed costs? What about fixed costs? Now we know fixed cost, it depends whether you are doing absorption costing or marginal costing. If you are doing absorption costing, then fixed cost can be absorbed using the OAR, right? If you are using marginal costing, then we don't absorb fixed cost because marginal cost and fixed costs are fixed. They are period cost. We never absorb under marginal costing. Just keep this in mind. I'm telling you. So for fixed costs, what you are going to do is the same way you can get the OAR, which is our total budgeted fixed cost, which is the 10,000, right? Divided by the total budgeted units, which is what? The 1,000 units. Do you remember? And this one will end up giving us an OAR of what? 10 cedis per unit. Do you all agree? So what becomes the flex? Now we know that how many units are we producing actually? How many units?
700.
700. So our fixed costs will now become what? 7,000 units. Are we okay? 7,000 cedis, sorry. So now if we have to re-prepare our budget, right? Our revised statement, we are not going to use the original budget again. We are going to use the flexed and then the actual, right? Because all will be 700 units against what? 700 units. So now we can compare. Do you all agree? Do you all agree now?
Sorry.
Yeah, so that we can compare now. So sales will be what now? What did we get for our sales? Let's go to our working. Sales was what?
21,000.
1,000, right? We worked it. So sales was 21,000, but original sales was 30,000, right? So look, we planned to sell 21, but we ended up selling 30. Have we done well or we have not done well? We planned to
Done well.
sell 21, but we ended up selling 30. Have we done well or we haven't done well?
I've done well.
We have done well. We sold more, right? By how much? We sold extra 9,000, right? So this is a 9,000 favorable variance. Hey, actual was not 30, sorry. Actual was 21,200. Not so. So we planned to sell what? 21, but we ended up selling 21,200. We have done well by 200, right? So this is a 200 favorable variance. right? We've got a 200 additional profit because we sold more. Let's go to our variable costs. Direct material. Direct material, it was how much? It was 10 cedis per unit, right? The flex was for 7,000, no be so? So this one was what? 7,000, but we actually spent what? 6,600. So see, we plan to spend 7,000, but we spent 6,600 for material. Have we lost or we have gained? Remember, we are comparing flex is like,
We have gained.
right? This is the revised budget. You are comparing it to the actual. So direct labor. Now, direct material, we planned to spend 7,000, but we ended up spending 6,600. Did we gain or we lost?
We gained.
Regain.
Yes. That means it's a cost saving, right? Of how much? 400. So it's good for us. Anything that's good for you is a favorable variance. You get it? Variance is simply the difference between the two. Is it a favorable difference or an adverse or unfavorable difference, right? Variance is simply difference. Do you understand? So direct labor, we plan to spend how much based on our calculation? That's the revised budget, which is the flex. Is what? 3,500, not so. So direct labor, we plan to spend 3,500, but we actually spent what?
3,800.
3,800. We have lost, right? Because we spent more. By how much? 300, right?
300. Yes, sir.
You get the idea. Variable overhead. For variable overhead, when we go up, we spend what? 3 cedis per unit, one, right? So we planned
Yes, sir.
one, but we ended up spending 2. Not so. We ended up
Yes, sir.
2. So 2. How much? We lost 100, right? Because we spent more than we anticipated. No be so. So you end up with what? Your contribution. Because sales minus all variable costs should give us what? Contribution. No be so.
Yes, sir.
21,000.
It will be 8,400 for the flex.
Then the actual
8,600.
600, right? Now we less our fixed costs, right? Now, since this one is under marginal costing because we did sales minus variable cost to give us what contribution, then we now take out our fixed cost. Remember, I told you that under marginal costing, fixed costs are fixed, right? So we do not absorb, meaning we cannot do what we did. So here we assume that the same fixed cost that was for the budget, I get it, is the same thing that will be, I get it, even if it is revised, because fixed costs do not change. Remember, they do not change. So it means that no matter what happens, the fixed cost that was what? The original 10,000 will still remain what? 10,000 at the flex level. Do you understand? Fixed costs will not change. But if it was absorption costing, then we will revise the fixed cost, right? By then doing OAR like I did. I'm just showing you the difference. Makes sense. So since the budget, the fixed cost will still be fixed, we compare it to what we actually had, which was 10,400, right? So 10,000 against 10,400. Have we lost or we have gained? We planned to spend 10,000, but we ended up spending 10,400. Have we lost or we have gained?
We have lost.
It's lost.
400, right? Okay.
Yes, sir.
So what do we get for our net profit? Is it correct?
Yes, sir.
Now, you see how cost behavior has been used to teach you all these techniques, right? Decision making, flex budget. It can be used anywhere. Cost behavior doesn't really matter. But one thing I want you to keep in mind is that what? Variable cost per unit is what? It's always what?
Constant.
Constant.
That was the main lesson. If you get this for me, you don't have any problem in management accounting again. Do you understand? Do you understand?
Yes, sir.
That is fine. So we'll come this question, we'll solve it again when we get to budgets, but I just wanted you to get cost behavior very well. Now, we said that the cost that we had, we have variable cost. We have been able to know much about variable cost, fixed cost. We learned a little bit about fixed cost. Step cost, we learned about step cost and even took an illustration with electricity, right? The last one is what we call semi-variable cost, right? Or mixed cost. Now, these are costs which have elements of variable and elements of fixed cost in them. And anytime you get such costs, you have to find a way to split them. Okay? You have to find a way to what? To split them. Are we okay? And I know you've watched the video on high-low method. Have you not? Or most of you have not watched it. How many of you have not watched the video on high-low?
I have not watched.
Why have you not watched? Anyway, no problem. Now, with semi-variable cost, right? We already know that total cost is equal to what? Fixed cost. Do you remember? Plus our variable cost per unit times the number of units. Do you remember we wrote this thing down? Do you remember?
Yes, sir.
And we
Yes,
came
sir.
up with a total cost equation. And we said this is the same as y equals a plus what? Dx. Do you remember?
Yeah.
Where
Yes.
x is the number of units. Okay. So this is what we are saying. We are saying that most of the time, when you have a semi-variable cost, right? It has fixed component and what? Variable component. Sometimes it looks like this, right? So it will be fixed up to some level and it has what? A variable component inside. It can be like this. It will be fixed up to some level, has a variable component. It could also be like this, right? It could be variable up to some level and be fixed, right? It can be in any form. But we are saying that no matter what, your duty as an accountant is to learn how to separate these semi-variable costs, the fixed from the variable cost, right? And then the best way we have different ways of doing separating fixed costs and variable costs, right? So separating fixed costs and variable costs, there are many ways. Okay, one, we have what? The account analysis method. Account analysis means that you yourself, you use your own discretion. You look at the cost of 100,000 and say, based on what we are doing, I think 30% is variable cost and then 70% is what? Fixed cost, right? So this one, use your own discretion as an accountant. And this one is not necessarily recommended because this one has a lot of bias. Do you all agree? That if a cost is incurred, then you use your own mind to say this is fixed, this is variable. Do you all agree? That is not the best method.
Yes, sir.
The second one is using linear regression. Okay. So where we use regression or least squares method. Okay, this one is more mathematical. Okay. We use regression analysis to get what? To separate the fixed cost from the variable cost. And the third method is where we use the high-low method, right? Now, regression method is done at the lower level. That's the intro to management accounting, right? Yes, where they use all these methods, except this one. They use this one and this one. But your level, ICA level 2, our focus is on the high-low method, right? This is what we use. Okay, we are not going to learn least squares, regression, and correlation. That is more of quantitative techniques. At this level, we are not going there. We will use the high-low to separate fixed cost from variable cost. Is that okay? So how does the high-low method work? There are some steps that you need to understand, right? When you are doing the high-low method. The high-low method is as simple as ABCD, but as to where they are being applied, that is what you need to understand. So with the high-low method, there are some steps. The first step is to determine your variable cost per unit. Why? Because this one, we know it's always what? We know this one is always what?
Constant.
It's always constant. And how do we get your variable cost per unit? Variable cost per unit at this one, because it's two separate levels of activity, you are going to take your cost at the high level, okay, minus your cost at the low level, all over what? Your level of activity at the highest level, minus your level of activity at the what? Lowest level, okay? And that gives you a variable cost per unit. Because it is constant, the next step is to what? Substitute the variable cost per unit into the what? The total cost equation, okay? Total cost equation at any level of activity given, okay? To arrive at what? The fixed cost. And we know that when we put it in, fixed cost, we know is giving us what? Your total cost minus what? Your variable cost per unit times the number of units, right? True or false? Because we know total cost equals fixed cost plus variable cost per unit all times the number of units. No be so. No be so. So if we want fixed cost, we can make fixed cost the subject. Do you all agree? Then the third step is to get your total cost equation, which is the fixed cost plus the variable cost per unit times the number of units, right? So that's how we do high-low method. So we can take a question and then we can use it to get our missing figure. Whether there's a step cost or whether there's no step cost, you can still do your high-low. It's not anything difficult. Is everybody on point? Do you want to put the steps down? Then we take some questions. Some difficult questions.
Yes, sir. We want to put the steps down before the questions.
Yeah, so kindly put the steps down. Are you done? Get some water. Are we done?
Sir, that's step 3. We can't see it.
Substitute the variable cost per unit into the total cost equation at any level of activity given to arrive at the fixed cost. When you do mathematics, you do y equals a plus bx, right? How do you find b? Don't you do y2 minus y1 all over x2 minus x1? Have you seen this before? Have you seen this one before?
What is that?
Yes,
Have
sir.
you seen this before? I know it's been long since most of you did mathematics, but have you seen this before?
Yeah. Yes, sir.
What you used to call gradient, right? This
Yeah.
gradient is the same as your variable cost per unit. And that is what we are finding here. This cost at the high level, cost at the low level, level of activity at the high and level of activity at the low is the same as the y2 minus y1 all over x2 minus x1, right? And that is what you are using to what? So you're actually getting your dy on the x, right? So this is differentiation from first principles, right? A change in y over a change in x. It's just basic mathematics, but don't worry about it. Yeah, management accounting. Are you done with the steps? Can we take this example? Can we go now?
Yes, please.
So let's take a simple question. And once you look at this simple question, you can see that we have output, right? We have output in units 200 and then total cost 7,000. What is the highest cost? Based on the example here, what's the highest cost?
Sir, please, we can hardly see the question. I don't know if you can broaden it a bit for us.
Can you see now?
Yeah.
Yes, sir.
What's the highest level of activity? So using high-low, what's the first thing we need to do? High-low is for separating what? Variable cost from fixed cost, right? In a variable cost position. So the first step is to get our variable cost per what? Per unit.
Unit.
And we know this is what? Giving us our cost at what? The high level minus the cost at what? The lowest,
Low level.
all over what?
High level of
At-
High level of activity minus low level of activity.
Okay. So what was the cost at the high level? 9,000, right?
9,000.
And cost at the lowest level? 7,000
7,000.
divided by what? At this level, the level of activity was 400 units. This one is 200.
200.
So in that case, we end up with what? 2,000 CDs over what? 200.
1.
And then our variable cost per unit becomes what?
10.
10
Cents.
per unit. Now, since we know this is constant, we can easily put it into the equation to get our fixed cost, right? So determination of fixed cost. Which level of activity should we use? Low or high? Low or high?
Right.
High. So using the high level of activity, which is how many units? 400 units, right? Not so. High level, was it not 400 units?
Yes, sir.
Came with a total cost
Yes, sir.
of 9,000, right? Total cost is 9,000. Okay, so let's include this and let's see. So if total cost is equal to 9,000, then we know that 9,000, which is total cost, equals fixed cost plus variable cost of 10 CDs times 400 units. Do you get it? Do you all understand?
Yes, sir.
Yes, sir.
Because its total cost equals fixed cost plus variable cost per unit times the number of units, right? So that means total cost, which is 9,000, equals to fixed cost plus 10 CDs by 400, which is 4,000, not so. That means fixed cost becomes what? 9,000 minus what? 4,000, not so. So our fixed cost is how much?
5,000.
5,000.
If you are not convinced, let's use the low level of activity and let's see. Using the low level of activity, right? Which is what? 200 what units. And total cost was what? 7,000, right? So if we try, we know that total cost equals fixed cost plus what? Variable cost per unit times the number of units. So total cost being 7,000 equals fixed cost plus what? Variable cost per unit being 10 CDs by what? 200, not so. And if we find, we end up with what? Fixed cost, what? 7,000 by what? Minus 2,000. And still, is it not still the same 5,000?
It is.
That means total cost equals what? 5,000 plus what? Plus 10x. True or false?
True.
So if they ask you to find the cost of 10,000 units, it is easy, right? That means our total cost will now become what? 5,000 plus what? 10 by the 10,000, which is going to give us what? 105,000 CDs. No be so. I hope high-low is not difficult, is it? I hope high-low is not difficult. Hmm? I hope high-low is not difficult.
So with constant practice, we'll get it.
It is mechanical. Just follow the steps. This one is just mechanical. Cost at high, cost at low, level of activity high minus the low. Once you are done, you just put the variable cost in any of these figures that you found to get the fixed cost. Then whatever they tell you to use to find, you use it to find, right? Let's see. Let's take this illustration too. Right? Slap limited. Okay. So what's the low level?
$65,000.
60,000.
Look at it carefully.
Or 60,
Low.
yeah.
What's the highest? Right? We all agree.
Yeah.
So what's our variable cost per unit? No, so. So in that case, what's the cost? The highest cost was what?
170
The lowest?
minus 140.
All over what?
All over
90,000 units,
90 minus 60,000.
right? 60,000 units. And that gives us what? 30,000 units, 30,000 CDs all over what? 30,000. Or? Is it 30 over 30?
Yes, please.
The figure correct?
Yeah.
Okay.
Yeah, one.
Which level should we take? Taking the high level, right? high level of activity, the number of units were what? 90,000, right? Giving us a total cost of what? 170,000, no be so. So we know that if total cost equals 170,000, then fixed cost will be what? We know that total cost equals what? Fixed cost plus what? Variable cost per unit, which was 1 CD by the 90,000 also. We just included it in the equation because its total cost equals fixed cost plus what? Variable cost per unit times the number of units, which is now 90,000 at this level, right? So we know total cost, which was 170,000 equals fixed cost plus what? 90,000 also. So 170,000 minus what? 90,000 should give us what? The fixed cost. Do you all agree? So what's our fixed cost?
It 80,000.
80,000.
So what's our total cost equation? That means total cost equals 80,000 plus what?
Plus 1,
Right?
1x.
Or plus X.
Thank you.
Are we okay? They show we should find total cost for 85,000 units. So total cost at 85,000 units will be what? 80,000 plus what? 1 times 85,000. Maybe what? And that gives us what? 165,000 units. True or false? 165.
True.
Okay. This is a question that came in May 2011. Management accountant. Now, in that question, they didn't give us total cost, right? They only gave us sales and profits. And students messed up. How did students mess up? They messed up because there was no cost. And high-low is only for separating cost. And you see students applying high-low to profit and high-low to sales. How do we get cost when sales and profit has been given? Yes.
You subtract your profit from your sales.
Of course, because we know cost plus what? Profit equals selling price, right? Or sales. So if they've given you this and they've given you that, but this is missing, you can subtract this from this and you get this, right?
Yeah.
So that's what they did. And I have already given you the total cost. So straightforward, you can use it to do high-low. So let's go. So cost at the high level, right? Minus cost at the what? At the lowest level, all over what? Level of activity at the highest level minus level of activity at the lowest level. Straightforward, right? So straightforward. We know this will give us the highest one, which is what? 490,000 costs minus the lowest, which is 280,000, all over the level of activity, which is what? And this gives us how much? $490 minus 280. $490 minus 280.
210.
Over how much?
1,000. 1,500. $140. $140.
You can use it to get fixed cost, right?
Yeah.
Debbie, your background is a bit noisy.
So taking today, let's take the low level. Taking the low level. Total cost was 280. The level of activity at that level was 1,500 units, right? So we know total cost equals fixed cost plus variable cost per unit and the number of units. So you take a 280,000 equals fixed cost plus 140 by 1,500. And that gives us what? That gives us what?
$110,000.
So how much? 110.
210. Minus 1,000. 280.
I mean, fixed cost is 70,000, right?
Yeah.
So that means total cost will be what? 70,000 plus 140x, right? No, be so. Please, are we on point? Any
Yes.
questions so far? Any questions so far? This is our last question. That means you understand high-low. But let's see where high-low gets a little challenging. Okay, so Nyong Limited has computed its factory overhead at high and low levels of activity as follows. Okay, so we have the levels of activity and direct labor hours, which is the level of activity, and then the total cost you can see. So we have this there, and their respective costs. And they say, assume that the factory overhead cost above consists of direct materials, rent, and maintenance expenses, right? And at the 50,000 level of activity, right? 50,000 labor hours, they said that what? It has determined that the level the cost exists in the following proportion. Indirect material, which is variable cost, right? And rent, which is fixed, and maintenance, which is semi-variable cost, right? Maintenance is always variable cost because you have a bit of fixed maintenance cost and variable maintenance cost in it, right? And they said they want to break the maintenance cost into the variable and fixed elements. Are we okay? So with this being said, they are saying that we should determine how much of the 176,250 at the high level is maintenance cost. So if we are to rearrange this cost, right? If we are to rearrange this cost and say that, okay, you remember we did a question like this earlier, right? Do you remember? The January, February, March question, April. Do you remember? Just that here
Yes,
we
sir.
arranged it into low and high, right? Which is what? You see, it's just the same thing. This one was 50,000 labor hours, not so. And this one was what? 75,000 what? Labor hours. Not so. Instead of months, they gave us hours. And then they are saying that when we break this down, what cost and what cost did we? The 50,000, let's break the cost down. They said the cost is made up of what? The cost is made up of what? So give me the breakdown. Indirect material was how much? In the 50,000.
Yeah.
It was how much?
So they just gave 50,000.
Indirect material was how much?
50,000. 50,000 naira.
It was 50,000. I've just made it Ghana cedis, right? Okay. And we know this is variable. That means at the high level, it's going to be what? Variable cost per unit is constant. Do you know that?
Yes,
Yeah.
sir.
So how do we get for the 75,000? We might just take the
So
50,000 and divide by the 50,000, right? That means it's 1 CD per unit. Meboa.
yes, sir.
So we just have to multiply by the 75,000 and we will get for this level. That means that one to be 75,000. True or false?
True.
True.
Okay. But we know if we compare the total cost, we compare to the total cost, right? This one, the total cost was what? 142,000. And this one was what? 176 or 250, not so. Okay. Now,
Yes, sir.
we know that there was what? Rent, Meboa. And we know rent is fixed. True or false?
True.
Rent was what? 60,000. That means rent will also be what? 60,000 here too, right? Because it's fixed. It wouldn't change. Not be so.
Yes, sir.
You're only left with maintenance. And it told us that maintenance here was 32,000.
2,000.
That means maintenance here will be how much? That's the missing figure, right? We can easily find it.
Yeah, I'm just ashamed of it. Talking about.
How much? How much?
32,000 divided by the 50,000.
No, you don't have to divide though. This plus box equals this. So what is box?
Oh, okay.
This is the missing figure. Because this one was
What's 1,250?
this was 32. So this one will be what? You're just finding the missing figure. And it is 41,250, right? No be so.
Yes, 41 to 50.
Please, do you all get it? You see this question, when it comes, people will fail.
So can you go over the again?
Listen. They've given you total cost of this and total cost of that. And they are saying this 142,000 has been broken down into this. No be so.
Mm-hmm.
Indirect material, 50,000 for variable cost. And once it is variable, we know we can easily get variable cost per unit, right? Which is constant. True or false? And once we get it, we can easily
True.
multiply this number of units and we can get the cost in there. Rent is fixed. That means in this cost to the fixed rent is there. But the only thing left is the maintenance. So if we compare this one, which when we multiply this by the 1 CD we got, we end up with what? The same 75,000. Not so. This one is 60,000, means it's fixed.
Yeah.
It'll still be 60,000 here, right? Do you get it?
Yeah.
And this
Yes.
one was 32,000, but because it is semi-variable, we know the total cost here to be 176. So we can easily compare this one to this one, and the missing figure is a 41,250. Does it make sense now?
Yes. But I have to go.
Do you all get it now?
Yeah, we got in the approach there.
Do you all get it now?
Yes.
Yes, please.
Yes, sir. Yes, sir.
That the semi-variable one, which is the maintenance, we can split it, right? So the maintenance itself has fixed components and variable components, right? So what is the steps?
We determine our unit by using the high and low method.
Yes. Okay, so the first step is what? Our variable cost per unit, right? Which is what? Our maintenance cost at the high level minus our maintenance cost at what? The low level. All over what? The maintenance level of activity, not so.
Yeah.
So you see how high-low method can be implemented in different settings. So let's see. We know that the high level was 41,250, right? And that was for what? 75,000 labor hours. Remember?
Yeah.
Then 32,000. Yes, 32,000 out of what? 50,000 hours. No be so. So what's the variable cost per hour? It was per labor hour. Variable cost per labor hour is how much? That's 9,250 over 25,000 hours, right? Understood? So that gives us what? That was 0.37 per.
0.37.
Okay. So now that I have this 0.37, what's the next thing to do? Determine the fixed cost, right? So taking the high level, right? High level, where the level of activity was what? 75,000 what? Hours. No be so? Was 75,000 hours. And total cost at that level was what? 41,250. No be so? We know total cost equals fixed cost plus what? Variable cost per unit times the number of units. So fixed cost is what we are trying to find. And we know that this level, this is 41,250 cedis. Not so. We compare to our fixed cost plus what? Variable cost be 0.37 times the number of units here was 75,000 what? Hours. Not so. We can easily get our fixed cost. And what will become our fixed cost? So we have 41,250 minus what? 27,750 equals fixed cost. So that means our fixed cost is how much? $13,500, right? Do you all agree? So that means our maintenance cost equation will be what? 13,500 plus what? Plus 0.37x. True or false?
True.
True. But what would our total cost become? Our total cost itself. Our total cost equation. Let's see. Our total cost equation. Let's group the variable cost and the fixed cost and let's see. So with variable costs, do you remember that variable cost? We had what? We had indirect what? Materials. Do you remember? Indirect materials. And indirect materials, the variable cost per unit was what?
5 sir.
It was 1 CD or
1 cedi.
1 CD.
Yes, sir, 1 cedi.
And in variable maintenance cost was what?
0.37.
Variable maintenance cost was 0.37, right? So
Yeah.
variable cost is going to be 1.37
0.37.
units, right? Okay. Now we need fixed costs. Fixed costs,
Total cost.
we had rent, right? Fixed rent, right?
Yes, sir.
Which was what? 60,000.
60,000.
And we had what? Fixed maintenance, also,
Yes, sir.
which was what?
32,000.
No, fixed maintenance was 13,500. We had it at 13,500. Remember, maintenance,
Oh, yeah, yes, sir, yes, 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 yes.
13,500. That means our total fixed cost is what? 73,500. Not so. So in that case, that means our total cost equation will be what? 73,500 plus 1.37x. Not so. This is it.
Yes, sir.
Let's try to put in any of the costs we had already and see if we'll get the same thing. So let's just put in 50,000 and let's see if we'll get 142,000. Let's see. 73,000 at 50,000 units. Let's see if we'll get it. 73,500 plus 1.37 by 50,000 units. When we put it in, what do we get? 73,500 plus 1.37 by 50,000. Did you get 142,000?
142,000.
So are we on
Yes.
point?
Yeah.
Let's try 75,000. At 75,000 units, let's try it and see. We put it in, we get 73,500 plus 1.37 by 75,000 units. And I end up with 176,200.
This is 250.
Are we on point?
Yes, sir.
Question maybe one more.
Pound.
And then the
You see, this question combines everything I taught you, right? Aha, cost behavior. This is how deep ICA can go. But nobody will give you this question, though. It's an advanced. Though it's not advanced though. It's not advanced. It's like the concept. Is that okay? Are you writing? Are we okay? I'm just waiting for your question, so that's why I'm silent.
So no questions.
But everybody's okay with cost behavior. Okay. So that brings us to the end of our session. Today we didn't learn anything. That's pained me. Then they share. I shame me pa. Today we didn't learn. Did we?
We didn't learn anything. Cry.
Um,
Cry. Yes, you have a crowd.
No. Pain me. Pain me. Please keep practicing, eh? So next week, effectively, we'll start looking at how to implement these techniques in a real setting, right? So we'll use it in CVP, cost volume profit analysis. Though there are videos on CVP, both single product, multiple product that you should look at, right? Then we'll dive into limiting factor decisions, which we'll be getting this diet. So after that, limiting factor decision, our next meeting will be on variance analysis. Okay, we'll look at how to do variances, basic variances, advanced variances, sales mix, sales quantity, mix and yield, work back variances, and labor ratios. Then we'll look at budget, master budget, cash budget, performance, then investment appraisal. Decision making is part of this marginal costing technique. So once you are done with CBP, limiting factor, we'll definitely dive into things like make or buy, shutdown. We've done special order, right? And you see, special order decisions are all about cost behavior. Have you noticed?
Yeah.
So
Yes,
special
sir.
order, all you need to do is see if that special order will generate what? An extra contribution, right? If it doesn't
Yeah.
generate, then you reject the order. It's like that. So next week, we are diving more into how to use marginal costing to take decisions, right? So I think roughly by the end of May, I could be confident that my people can tackle management accounting head on, at least though you have not done 100%, at least with the knowledge you have, you should be able to get more than 50 marks.